Don't let the fear of striking out keep you from reaching out. Hey everybody, I'm Kayla Scott with LPT Realty. Today I'm joined with Brent Christie from Responsive Mortgage, and we're going to be going over some important factors in reaching out to lenders.
Hey, Brent Christie with Responsive Mortgage. I've been in the industry going on my 23rd year. It'll be 23 in August, strictly in the DMV area. And we cover all bases as far as first-time home buyers, veterans, everything of that nature. We are a full-service shop, so we actually in-house have the ability to do DSCR loans, which are investor loans. Obviously, your standard Freddie, Fannie, conventional, FHA, VA. I'm very strong. It's a passion of mine personally. So I have a ton of friends that were veterans and served, and I think it is something that we should be specializing in and giving back to a veteran who's given their lives to us. But realistically, we are across the board, full service shop, specialized, like I said, in veterans and first-time home buyers.
Right. And we do see a lot of those here in the DMV area,
Absolutely.
especially being so close to Quantico.
Correct.
I am a certified military relocation professional now. You specialize in the VA home loans and first-time home buyer programs and stuff like that. Is there anything that you'd like to mention as far as credit limits or interest rates that you want to point out for our people?
I mean, absolutely. I think right now the way that the structure is in the environment is structured. First-time home buyers, VA, are getting the best deals in the market. Freddie and Fannie and the VA have really incentivized those buyers to be as aggressive rate-wise in the market. We're seeing mid to low sixes for first-time home buyers, and definitely I have veterans that are getting into the fives. So it's very, very advantageous for those particular buyers to jump into the market now. So there are going to be income limits on the first-time home buyer programs, but we can work through those. And I take a more vested approach when I go through, and I have an interview process when we're doing the loans. So we're going to go through step by step. We actually do a Zoom call. So I'm a visual learner myself. So I like to see and get a feel, and we walk through payment structures, and you can see the whole payments. You can see taxes, insurance, what the fees are, all of those things on the front side. But it is a really, really great time for first-time home buyers as well as veterans.
Awesome. That's great. Do you participate in the 2-1 buy down program? I know it's very popular down in the Richmond area.
We do. Absolutely. So we actually have a couple buy downs available. We even go up to a 3. We have a 3-2-1, 2-1, 1-1. So we have tons of products, and we can do all of those. We handle them in-house, obviously. But the most attractive that I think is out there right now is we have a lender paid buy down that is actually paid by us. So we will actually, for the first year, so for 12 months, we will lower the interest rate 1% to kind of like circumvent the current market, right? Rates are higher than what a lot of people feel comfortable with. So we do that 1% buy down to take care of getting them a much lower interest rate, obviously for the 12 months, with the thought that the market is going to shift and stabilize and drop back down. All of the critics are saying that we should probably see, some of the rate reduction throughout the next 12 months. So take advantage of the buy down, get the lower interest rate on the front side for 12 months, and then we are going to refinance you probably within that window.
Right.
Yep.
And then with the VA loans, there are many different types of VA home loans as well.
Absolutely.
So even if you go into a VA home loan with the lower interest rate, you do have that opportunity to refi under a VA home loan as well.
100%. So you can take advantage of the buy downs with the VA as well. But we also have what's called an IRRL, interest rate reduction loan. So if rates do drop, we actually cover all of our fees. We waive those. So you're not going to be paying those on a refinance. But also it is a low income and doc. So we don't have to review income. We don't have to do another appraisal. We actually just will go ahead and do the actual refinance. You do have title fees and you do have recordation costs, but realistically no other fees are associated with it. And it is a streamlined way to reduce to whatever the current market is.
Okay, that's great.
Yep.
And I know you do like to give back to our veterans.
Absolutely.
So you want to explain a little bit of that?
Yeah. So I personally don't charge any of our underwriting and processing fees to any of the veterans as a thank you for your service. We actually cover that out of our branch, and equates to about $2,000, but anything and everything I can do, we actually love to help and take care of that for them.
That's amazing. I appreciate that,
My
being
pleasure.
a military spouse
Absolutely.
myself. So I always tell my clients, as that warm weather starts coming, the real estate market starts heating up as well.
100%.
So we're obviously could get into that multi-offer situation. So some ways that we can help those loans stand out, obviously strong EMD. Contingencies, those are like little security blankets for your earnest money deposit.
Right.
So you wouldn't want to waive all of your contingencies, but what are some that you would recommend?
Absolutely. So I'm seeing very much in the market, it is already hot. Everything has multiple offers. So EMD has to be very strong and waiving as many contingencies as humanly possible. So what we do is we're going to run all of our loans through pre-underwriting. So we're actually going to have an underwriter, when you get pre-approved with me, you're going to go have pay stubs, W-2s, bank statements, all of those things supplied on the front side. So we can actually submit to an underwriter to have them review them and confirm that the price that we're shopping for. So before we've even found a property, shopping, we know the max limit that they can afford, and the underwriter has already reviewed and approved. So all we have to do is supply an appraisal and a contract, and then we can close. So what we're doing is we're removing finance because we're already approved.
Right.
And we can improve the closing time frame drastically because we don't have to go through the true approval and processing part of it because we've already done it. So you can shrink your time for settlement, which all the sellers love, drastically. So the average time can go from a 30-day, which is this industry standard, down
21
to 15 to 20, even down faster if needed, down to 11 to 12 days.
Wow, that's quick.
Yep.
I have not seen one that quick.
I had two last month that were 11 days and 13 days.
Wow.
Yep.
Okay.
Yep.
So I've definitely seen a lot of people lately waiving home inspections or using home inspections just for informational purposes
Correct.
only.
The walk and talks.
Right.
Yep.
Yeah. Do you recommend doing that, especially on older homes around this area? I know sometimes people say, massive remodel has been done. Would you recommend even waiving home inspections on those?
I think every transaction is going to be different, right? So if you have multiple offers, the chance of being able to get a home inspection are probably slim, but there are still chances where you're going to be able to get that. Obviously, keep as many contingencies as you think you can to win the deal. But I think a lot of the houses that if you are doing the walk and talk inspection or, informational only purposes are sufficient. Just knowing that you may run into some things that you absolutely have to negate, know that they're going to have to be fixed, right? So in this market, what I'm seeing in probably the last 20 or 30, everybody's waived home inspections, unfortunately, just because it's so competitive. And I think if you can keep it, absolutely. But just know that might be a scenario where you have to give up a little bit to get a little bit.
Right.
Yeah.
I definitely have been working a lot with appraisals, of course, making sure we're keeping our appraisal contingencies.
Yep.
And I was just working with an offer. We did appraisal gap.
Yep.
So you want to explain a little bit about
absolutely.
appraisal
It's
gaps?
becoming really, really popular. So appraisal gap is what you're going to run into is, say we offer $800,000 and it escalated up to $850,000. What there's going to be a scenario where there may be a difference, right? So a normal wave of appraisal, if it appraises at 800 and you bought it at 850, you're going to be responsible for that $50,000 gap, right? But the gap is saying we will cover up to say 15,000. So if it appraises at 8, we'll pay 15,000. Then there's a renegotiation of the remaining amount, and it kind of gives a win to the seller, but it gives a win to the buyer as well. So in obviously a bad situation where you don't appraise, knock on wood, that's not happening, but realistically they do happen, especially when we're escalating, above and beyond the list price. You do have that scenario where both parties can still win in some form or fashion. Everybody has a little security, right? So the seller knows that, okay, worst case scenario is I'm getting a certain amount covered. Best case scenario, obviously it appraises, everybody's happy. But if it doesn't, I'm not in a situation to where I'm, completely out. The buyer's protected where they're not completely out of pocket for the whole amount. And it usually lands in between is usually what I'm seeing is, splitting the difference between the two.
Right. One of the very first things that you should do, obviously, when you're thinking about buying a home is getting that pre-approval.
Right.
So reaching out to your lender, reaching out to your realtor, and kind of cohesively starting that process together for that pre-approval.
100%. I think that is paramount on any transaction is knowing the buyer's buying power on the front side before you show one property, before you put them in your car, before you do anything. The approval process takes literally 10 minutes and it's all online. It's very easy, very simple. I would encourage all buyers, all agents to utilize that prior to, because what if you fall in love with a $500,000 house, but you're only approved to buy 400?
Right.
Then everybody's starting off the transaction upset. Mm-hmm. So realistically, I think it's super important to do an approval process on the front side.
Right. I feel like not a lot of people think that buying a home is a team effort. Mm-hmm. So they think, oh, I have a realtor and that's really all I need. But it's really, you have a realtor, you have a lender, you have a settlement company, you have an appraiser, you have all of these different factors that kind of all lead you to the path of closing.
Right.
So when they do start that process, lender, realtor, we look at homes when we get under contract after all of our, we're looking at homes and we find the one, we put in all of our offers, we get under contract, we reach out to our settlement company, and we finally get to close. When we're doing all of that, what are some of the common mistakes that you're seeing buyers run into, such as, making big purchases?
Correct.
Or...
So the big thing that we're running into is big purchases. They get excited. They want to buy the furniture. They want to buy a new car. Unfortunately, that happens, right? People have to buy these things. Running up credit cards, going on trips, all of those things that will affect your debt to income ratio, which when we've done the approval on the front side could drastically change it. I wouldn't say that that's the biggest problem. The biggest problem is not conveying that information to us in a timely manner, right? So, you're going to buy a car. Call me. Brent, I got to buy a car. My car broke down. I have to buy something. Okay. Here's what, let me know what we're doing. I can then document it into the file, rerun the approval, make sure that it's okay. So those are the type of things that you run into, not securing a large enough EMD on the front side. I think it's imperative. Sellers like that you have skin in the game. If you don't have any skin in the game, through your deposit, they don't think you're serious. And so those are like one of the big things that really jump out. Job security, obviously right now, there's a lot of that, insecurity that's floating around.
Yeah, that uncertainty.
Exactly. Mm-hmm. Making sure that you're doing everything on the front side. Don't switch right at the last second. If it is a scenario where that happens and you have Brent, I have an opportunity where I can make $100,000 more than I'm doing right now. Obviously, we're going to want to set you up in that situation, but just communication. Communication is key. And unfortunately, so many times they withhold that information from us to where we don't see it. And, that's 9 times out of 10, if we've ever had an issue, it could have been resolved, but it turns into a fire drill because we catch it, which we're always going to catch it, but we catch it at the end and we could have addressed it 2 weeks earlier and it been a non-factor. But then it becomes obviously time sensitive because of the transaction. And then it becomes a much more difficult, hurdle to jump.
Right. Yep. Yeah, making sure you have that open line of communication with everyone on your team is huge.
Absolutely. I speak with all of my clients every Friday, checking in, letting them know where we are in the process. I do the same thing with my agents. And you absolutely have to have that open line of communication because life happens, right? It happens all the time. We can't control those factors. What we can control is the information that comes in and how we process it.
So seeing as how you have almost 30 years in the business.
Too long.
Yeah. A lot longer than me. So With that experience, how do you think we could foresee some trends happening soon?
Yeah, absolutely. So I think it's important to look big scale, right? So if you look at a small picture, everybody has 2%, 3% interest rates. That's a very small snapshot over the last 3 or 4 years. But if you take it out to when they've been recording, so 1971, they started recording the national average for interest rates. And if you take a broad stroke, so that time frame, you're looking at a national average of 7.71%. So right now, market's actually a point better than the 30-year average of rates. So if you look at it from that perspective, we're in a great position.
Right.
But unfortunately, everybody is looking back to where, 2020, 2021, when everybody was getting super low rates. But what they don't realize is that was subsidized by the Federal Reserve. So we were obviously in a national crisis with COVID. Right. So they were artificially buying bonds, which drove interest rates down. So there was no inflationary concerns. There were none of that factor, but it actually put us in a situation that's only happened twice. So I was unfortunately in the market for both of those, 2008, 2020. That's the only time in history that they've actually purchased bond securities. So that naturally drove down interest rates because of national crises. Right. So I don't foresee that happening. So what we're seeing is more of a return to the norm. But then you start to factor in multiple, pricing increases, things of that nature. I feel like the trend is we've kind of, hit our peak, but now we're in a situation where we're kind of returning to a more normal rate, where most people are saying that the steady interest rate is high fives to low sixes, which we're right there now. We're right on the edge of that.
We were in the almost sevens.
Exactly. So if you look back a year from to almost today, you're looking mid sevens. Mm-hmm. So we've returned, which was still within the national average for 30 years. We're now back into, the low, mid sixes, with obviously VA pushing like high fives. Mm-hmm. I think we're still going to see more of a shift as everything starts to balance out, inflation starts to come into control, all of those things start to factor in. I think we'll see a more normal rate. But an interest rate of a point, it's not drastically affecting the market. And what's going to happen is I think we're going to see a ton of people that are going to flood. If we get into the fives, we're going to see a ton of people come back into the market looking to buy. Demand is not, demand is there, right? Mm-hmm. The supply is the issue. Right. So what the problem is going to be is hopefully we'll start to see people at that point list their homes because they're willing to get rid of their 2 or 3% interest rate. Mm-hmm. And then obviously we'll have some more supply. But what happens in that situation is you're competing. Instead of competing with 5 or 6 people, you're now competing with 10 or 15. Right. So I think right now is an ideal time to purchase. Yes, rates are a little bit higher.
But the competition is much less.
Absolutely. And so you're still going to be able to hopefully get a couple contingencies in there, your home inspection. Hopefully you'll be in a situation where you can start to, weigh those options and not be as competitive and get in now, mm-hmm. knowing that, hey, we're probably going to refinance if rates drop more than a point, which is the standard for refinancing. If we drop a point, we refinance. Right. So we get in now, we ride the wave of appreciation because there's not as much supply out there. So people are going to continue to escalate up. And in a year, we can take advantage of the lower interest rate, but we bought $30,000, $40,000 less than our neighbor did and still take advantage of the low interest rate because we have a much smaller loan. And we've gained 30 or 40 grand in appreciation. So it's an incredible time.
Right. So you think that the harm in waiting would kind of almost repeat 2020 in the sense that people would be throwing in 40, 50,000 over asking, waiving every single contingency, and possibly...
We're already starting to see that happen.
Right.
Yeah. So You're going to be in a situation where you've overpaid, not overpaid, but you've paid an escalated price on a property because you're competing against 10 people. Mm-hmm. And so the only way to win is, if I'm going to sell something, if someone offers me
more money,
$100 for it, and someone offers me $50 for it, I'm selling it to the person that offered $100.
Exactly.
So I think that's, unfortunately and fortunately, the market that we're probably headed towards.
All right. Well, that's definitely something to think about. I'm definitely seeing price increases along with the, like you said, supply and demand.
Yep. Agreed.
Well, thank you so much, Brent, for coming into the studio and filming with me today. It's been very informative for both me and I hope our viewers today. Go ahead and provide your information so that everybody can reach out to you.
Sure. My name is Brent Christie. I am the branch manager for Responsive Mortgage. My phone number is 703-801-8014. Please reach out with any questions, concerns. I'm always available to help. Thank you.
Bye, guys.